So Graham, here we are another week of working at home. How you making out?
Uh,
Everyone.
Pretty good. I think it got a little more growth on my beard going, but I'm doing good. How about you?
Good. We're doing well. Just can't wait till we can get out of the house, though.
Well,
So Graham, I appreciate you coming on. Hey, I want to find out where the rates are today.
sure. As we talked about last week, rates were kind of fluctuating towards the higher end.
Okay.
Um, this week, we're seeing a lot more stabilization in the conventional product. So today, you get 3.5%, 3 and 3/8 on a 30-year fix, which is
Okay.
substantially lower than last week.
Right. Yeah. Definitely.
Some of the jumbo stuff is still expensive. There's not a lot of jumbo investors, so you're probably in the low fours if you're looking at the jumbo loan.
Okay.
And the government loans are pretty good as well. 3.5, 3.25% on FHA via
Okay.
so.
All right. Great. So Graham, in this time, some people their closing may get delayed a little bit. So what happens as far as the interest rate? If someone's locked in their interest rate for a certain time frame, and we go beyond that time frame because of delays under the circumstances, what happens at that point?
Sure. So the typical rate lock period is 60 days.
Okay.
There sometimes, if you want to pay slightly extra, you can get a 90-day lock or even longer than that, but it's very custom to have a 60-day lock.
Okay.
At this point, there's a lot of nervousness in the market. If you're unable to settle within that 60 days, let's say, and you need to add on 10 days or 15 days onto the lock,
Right.
there is a small premium that you're going to pay.
Okay.
It's basically about a quarter point for every 10 days to add on. And that's if the rates are doing well. Some at this point, a lot of the companies are out there are just saying we'll renegotiate the rate if it expires, and if rates are higher at the time, you could end up getting a higher rate and not qualifying for your loan.
Okay. And so if you can't qualify for your loan, if the rates goes higher, are there any options for you?
Sure. I mean, you could always pay points to buy the rate down to get qualified. Okay. That's an option. You could look at a different program. Let's say, I would say right now we're kind of in the middle of the market getting some stability back.
Right.
And any of these issues were probably very short term within the next 30 days. So anybody that is like buying a house now that would lock in for 60 days, I'd be pretty confident that they'd be able to get everything done and have a normalized market by the time they settle.
All right, that sounds good. And so do you think you can still do a 30-day settlement, or do you think it's going to, minimum should be about 45 days or 60 days? What are you thinking at this point?
Well, from the lender standpoint, we can accommodate 30-day closings.
Okay.
Again, as in normal times, that's with the cooperation of all the parties. So
yeah, definitely.
You need to get the appraiser out there quickly. You need to get the documents in that you would need to document the approval, and the buyers and the sellers would have to be accommodating.
Okay. And you mentioned appraisals, and it seems like some investors are accepting a virtual, or not really a virtual, like a drive-by appraisal, and some still require going in the house at this point, taking the proper safety protocols, I guess, right?
Correct. Yeah. Most of the investors that we work with are still requiring a full appraisal.
Okay.
And what we're telling the sellers is just to, have all the doors in the house open and all the lights on,
Right.
so that the appraiser can just walk through, take their pictures, and leave. They generally wear gloves and a mask when they go in the houses anyway.
Okay. Yeah, definitely. All right, great. And we talked a little bit last week about people are unfortunately being unemployed at this point, and just to reiterate what we talked about last week, unemployment does not count towards income for buying a house. So, is that correct?
That's correct. Yeah.
Okay.
So if you're getting laid off and collecting unemployment, that would not be we would not be able to use the unemployment to qualify for your mortgage.
And you would have to then, at that point, have one paycheck back in your regular job, right?
Correct. Yeah. If you're let's say you're furloughed and your company tells you you're going to be off for 3 weeks, we would need them to be back that 4th week with a paycheck showing that they are back to work full time.
Okay, great. And Graham, the government's sending out a stimulus package. It's called the CARES Act, and people are going to be getting, say, $1,200, $2,400 if they're married, some money for the kids and all. And if they use that, can they use that money for, down payment settlement costs?
Absolutely. That's actually a great investment with this program that the government has.
Right.
It will create, buying a house creates a lot of opportunities, a lot of jobs along the way for everybody involved, including you and I, not to mention all the people at Home Depot that you're going to go buy things for, appliances, everything. So yeah, that money can be used. Mortgage companies will consider that assets that you can use to purchase a home.
Okay, terrific. So Graham, I'm looking forward to getting things started again. As you know, we have a lot of limitations right now in the real estate businesses of what we can and cannot do. So I'm looking forward to get back to work full time for sure.
Absolutely. I'm looking to go out and not be afraid to bump into somebody.
I hear you, Graham. All right. Well, thanks again for coming on. We'll see you next week, Graham.
Okay.
Stay safe.
You got it, Paul. You too.
Thank you.
Take care.